It's good to have you with us today.
Thank
How
you.
much is riding
you.
on this week?
I think there's a lot riding on this week if we look at the value trade and if we look at the cyclical trade, because as we all know, financials are a traditional value sector, so people are watching that. But what I want everybody to remember is that ready or not, the recovery is coming. And that doesn't necessarily mean that there have to be some sectors that win and some sectors that lose. I do think as we move through the rest of the year, we are at an inflection point, but maybe not the one that Jerome Powell talked about. The inflection point that I would be watching is the one where we have to hand off from policy, from fiscal policy and monetary policy, back to fundamentals, and that's where earnings start to matter.
So Steve,
what I want to see this week is guidance.
Okay, interesting. Steve Weiss, you know, the market's already had a big move, right, into earnings, so expectations are high. Does that put more now riding on this week? Is it truly a critical week, given where we've come to?
Yes, it is. I mean, you're anticipating, as you mentioned, that companies are going to blow out earnings, but not only that, they're going to raise their guidance going forward, and that very well may happen. I actually think it will, but it'll be selective, not all will. So I think that that's going to continue the market going, at least support it. What's more important right now is the immediacy of inflation. By that I mean CPI tomorrow. That could impact the market. Now, it'd be unusual to see the flow-through that we saw in PPI last week, which was a very hot number, going to CPI immediately, but it could happen. So the eyes are going to be more on inflation than they are going to be on earnings, in my view. But you can't have earnings numbers disappoint, because that would take you down without question. You'd have to reset. Because right now the market's trading with a lot of complacency, as we see in the VIX, that we're not going to see any type of sell-off in the market, and I think that's just completely wrong.
Well, it just matters, Joe, how much of the good news, the expected good news, is already baked in, right? Because we do expect that earnings are going to be good and that the outlooks are going to be good, and that's what Morgan Stanley's Mike Wilson's talking about today. How much of the reopening has already been discounted by the markets, he asks. Quote, in our view, the breakdown of small caps and cyclicals are potential early warning signs that the actual reopening of the economy will be more difficult than many believe. That raises the issue of complacency. Weiss mentioned where the VIX is, below 18. How about that?
It's interesting because I wonder, Scott, is the VIX suggesting complacency, or is the VIX suggesting a calm environment? And if it's suggesting a calm environment, then the bullishness is going to extend itself. I fully anticipated that you would see the recovery of technology in the formation of the market coming into earnings. I think now the sequence of the way S&P earnings are going to be reported are favorable for investors. You're going to hear first from financials. There is going to be a tremendous amount of reserve release. There's going to be a tremendous amount of fee income that was generated both by the underwriting of SPACs and the refinancing in the mortgage market. So I like that sequence, and I think the bullishness is going to continue. Real quick, to Liz's point on guidance, unless we're going to be talking about the impact for a rising corporate tax rate and what that's going to do to 2022 EPS, how could any of the guidance not be bullish from the communication from CFOs and CEOs?
Yeah, because I don't think you're going to get much of that yet at all. That feels like so far down the road, you know, that I don't know that we're going to get much concrete on that. Degas, how do you see it? What's riding on this week?
Yeah, so I think that the accommodation by the Federal Reserve is really setting the tone that inflation is not going to be a problem, because they're going to allow inflation to run because of the need to get the unemployment rates down, because you want to get the unemployment rate between 4 and 5%. So what I see is that going forward, we're going to be focused more on earnings. We had a great ability to pull back and reduce operating expenses, which is going to mean that profit margins will improve. We're going to see greater number of earning surprises. So we really feel that this is more of a company focus versus a macro focus.